Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at strategy, ticker MSTR.
If you find our talks useful, please consider subscribe, like, and comment underneath. And just a quick note before we dive in, there is a StockOracle 14-day trial link in the description. We're an affiliate, so we might earn a commission if you use it. Also, please keep in mind that AI insights and value estimates can be wrong, so always verify them yourself. We don't give financial advice or tell you to buy, sell, or hold. We focus on capital protection and long-term wealth building here.
Exactly. We're looking for durable growth, not just, quick trades.
Right. So I want you to imagine holding an asset, a single asset, worth over $60 billion.
Okay, that's a nice thought.
Yeah, right. And then, in the span of just 1 week, the value of that asset surges by nearly 15%.
I mean, you'd be thrilled. Pop the champagne, call the accountant.
Exactly. But then you look at your overall net worth on paper, and it shows you've somehow plummeted by 67% over the last year.
That makes absolutely no sense. It completely contradicts how wealth building is supposed to work.
It really does. But this mind-bending paradox is the actual everyday reality right now for strategy. So, welcome to this deep dive. Today we're opening up a brand new equity research report on the company dated August 20th, 2026.
And our mission today is to figure out how a standard enterprise software company turned into this highly leveraged Bitcoin proxy and why it's currently trading at a really rare discount to its own assets.
Right, because we need to know if this is a massive long-term wealth-building opportunity or just a dangerous value trap that's going to wipe out capital.
Yeah, we have to protect the downside first.
Yeah.
To do that, we need to define what strategy actually is right now, because they have this wild dual identity.
So let's start with the wealth-building thesis. On one side, you've got their original core business.
Right, the enterprise analytics software. We could call this their existing engine.
And looking at the Q2 2026 numbers, it's a very solid, stable business. They pulled in $122.4 million in revenue for the quarter.
Modest growth, too, about 6.9% year over year.
Yeah, and a really healthy gross margin of 67.6%. It pays the bills. It's a respectable, cash-generating operation.
But then you have to look at the vault, the emerging engine, or honestly, it's become the entire vehicle.
Yeah, the treasury strategy. This is where the scale gets just absurd. They hold approximately 840,447 Bitcoin.
Which is just staggering. They are one of the largest corporate holders on Earth. They acquired that stockpile for roughly $63.36 billion.
So the software business, as good as it is just completely dwarfed.
Oh, entirely. The financial profile isn't about software licenses anymore. It's completely dominated by the daily volatility of Bitcoin.
Which is a huge red flag for capital protection. And it leads directly into this $20 billion shock in their earnings.
Yeah, this is the part that breaks people's brains.
In the first half of 2025, they had a net income of $5.8 billion. Fast forward to the first half of 2026, and they reported a net loss of $20.762 billion.
Just jaw-dropping.
When I was reading the research, my brain just stopped. Like a $21 billion loss in 6 months. How are they not bankrupt?
It's a great question. And it comes down to accounting quirks.
Right, I was trying to visualize this. Like, okay, imagine you run a profitable local bakery, okay?
I'm with you.
You sell tons of bread, great margins, predictable cash flow. But instead of keeping your cash in the bank, you buy physical gold blocks and lock them in a vault in the back room.
Right, a treasury asset.
Yeah. And you're still selling the same amount of bread every day. The bakery is completely fine.
Yeah.
But if gold crashes globally 1 week, your accountants tell the IRS you lost a massive fortune.
Even though you didn't sell a single ounce of your gold.
Exactly. You didn't sell anything. So how does strategy lose $20 billion without closing its doors?
It's because of a rule regarding non-cash impairment markdowns. The key word there is non-cash.
Meaning paper losses.
Exactly. When a company holds an asset like Bitcoin, accounting standards force them to report its value a certain way. If the price drops below what they paid, or its previously recorded value, they have to take an impairment charge.
They mark down the value on the official books.
Right, so that $20.7 billion wasn't cash giving the building. Strategy didn't actually sell any of their Bitcoin. They still have all 840,447 coins.
But because the spot price fell during that specific 6-month window, they were legally forced to report it as a massive net loss. The vault just temporarily shrank on paper.
Yeah, the existing software engine was still humming, but the paper loss on the emerging engine wrecked the income statement.
Which explains why the stock just got demolished. It fell 67.36% over the trailing 52 weeks. It's sitting around $112 right now.
But here is the core anomaly, the valuation disconnect that makes this so fascinating.
Yeah, let's look at the technical and sentiment check.
While the stock was getting hammered over the past year, in that exact same recent time frame, specifically the week of August 20th, 2026, Bitcoin went on a tear.
It did. It surged past 71,000 to hit $72,500.
A nearly 15% jump in 1 week. The report notes it was fueled by a $500 million short squeeze in the crypto markets.
Right, where traders betting against it get trapped and have to buy to cover, which acts like rocket fuel.
Exactly. So Bitcoin is rallying hard, but Strategy stock is trading at a price-to-book ratio of 0.8261.
Okay, for anyone new to valuation metrics, price to book, or PB, compares the stock's market cap to its book value. Book value is basically assets minus liabilities.
Right, so a PB of 1 means the market values the company exactly at its net asset value.
But 0.8261, that means you are essentially buying a dollar's worth of assets for about 82 cents. It's on sale.
And that is incredibly rare for a company not facing imminent bankruptcy.
So as someone focused on protecting capital, I have to ask, if their main asset is skyrocketing and the stock is literally trading below book value, why isn't Wall Street rushing to buy it? What are they afraid of?
Wall Street is pricing in some massive threats. They see some very specific ticking clocks.
Let's talk about what could go wrong. The biggest threat to this whole thesis.
It's the debt. Strategy didn't just use spare software cash to buy $63 billion in Bitcoin. They borrowed heavily.
Yeah, the report shows $6.71 billion in long-term debt.
Against only $1.712 billion in cash reserves.
That's a scary ratio.
Very. And the biggest ticking clock is a September 2027 convertible debt put date.
A put date means debt holders can demand their money back in cash, right?
Yes. And management's goal is to get the stock price up to $183 by that date. If it hits that, the debt can just convert into equity.
Shares instead of cash.
Right. But if it doesn't hit a 183, they have to figure out how to pay back a mountain of debt with very little cash.
A huge liquidity crisis.
Right.
And that brings up the dilution threat, which I absolutely hate as an investor.
Oh, the ATM offerings, at-the-market equity offerings.
Yeah, creating new shares out of thin air and selling them to raise cash. If they issue shares while the stock is down 67%, they have to sell a massive amount of them just to make a dent.
Which heavily dilutes existing shareholders. Every new share means your slice of that 840,000 Bitcoin pie gets smaller. You're watering down the soup.
And the insiders seem spooked too. Look at the sentiment check. The report shows 51 sale transactions by insiders versus only 3 purchases recently.
I mean, insiders sell for lots of reasons. Taxes, buying a house. But 51 to 3.
Yeah, it's a cautionary signal. When the people inside the building are selling while the stock is historically cheap, you have to pay attention.
But to be fair to management, they aren't just sitting there waiting for 2027. They have a catalyst roadmap and a defense strategy.
Right. They're playing financial chess.
They're holding $3.75 billion in U.S. dollar reserves, specifically to cover preferred dividends and debt.
Which protects them from being forced to sell their actual Bitcoin. A forced liquidation would be a disaster.
Exactly. And they are aggressively buying back their own depressed STRC preferred stock and MSTR common stock. They're shrinking their total liabilities.
The liabilities actually dropped from $10.598 billion at the end of 2025 to $7.236 billion by Q2 2026. So they are actively defending the balance sheet.
And institutional money is noticing. The report shows institutions had a $180 million net increase in stock holdings over a recent 2-week period.
The smart money is buying the discount. So what are the catalysts that could actually close this gap?
Near term, it's the Q3 2026 earnings. If Bitcoin stays high, those massive paper impairment losses could reverse.
Right, they could show a massive net income again, which would shock the market positively.
Then there's the medium to long-term catalysts, the macroeconomic drivers, mostly regulatory tailwinds.
Yeah, the research mentions Washington. Now, I want to be very, very clear to our listeners right now. We are not taking any political sides here.
Absolutely not.
Whether it's the right or the left, we aren't endorsing any politician, any candidate, or any policy. We are simply reporting neutrally on the events mentioned in the source material because they act as catalysts for the market.
Right. Capital flows follow policy.
Exactly. So the report mentions President Trump urging Congress to pass the Clarity Act, and there's a White House crypto summit.
Wall Street watches this because regulatory clarity is the holy grail. If traditional finance gets clear rules, institutional capital floods in.
Which drives sustained Bitcoin demand. inflating strategy's treasury. And that leads us to the optionality, the 3 to 5 year blue sky scenario.
Yes. Now, I must state clearly, a blue sky scenario is an optimistic projection. It shows what a business could become if everything goes right. It is not a prediction.
But let's look at it. What has to go right?
First, Bitcoin sustains a multi-year uptrend. Not just a short squeeze, but durable growth.
Okay.
Second, the stock naturally rises above $183 before September 2027. The debt smoothly converts to equity and the refinancing risk vanishes.
And all the while, the existing software engine keeps generating cash flow to pay overhead.
Right. If they execute that, strategy completely transforms. It's no longer a distressed, discounted stock. It re-rates into a premium digital asset financial holding company.
The market would stop punishing the debt risk and start paying a premium just for access to the sheer scarcity of their Bitcoin stockpile.
It becomes a high beta asset, amplifying Bitcoin's upside. That's the blue sky case.
But it's precarious. It all hinges on Bitcoin's long-term price trajectory. So let's wrap this up with our wealth-building verdict. The base case here is a stable software business bolted onto a highly leveraged Bitcoin treasury.
Right. The biggest threat is Bitcoin crashing back down, which strains liquidity and triggers highly dilutive share issuance.
And the blue sky case is sustained crypto growth, smooth debt conversion, and a massive re-rating. So the research frames this as a very high-risk, high-reward scenario, depending on your conviction in digital assets.
Exactly. Everything relies on the vault.
Which leaves us with a final provocative thought. If you're building long-term wealth, look at this anomaly. The financial engineering and the treasury are so massive, they completely eclipse the actual product the company was built to create.
The software is basically an afterthought now.
Right. Does that redefine what a company even is? Are we looking at the future of corporate balance sheets, where every company holds a volatile digital treasury? Or is strategy just a completely unique, highly leveraged anomaly that will never be replicated?
It's wild to think about.
It really is.
Yep.
Something to mull over next time you look at a balance sheet. Thanks for joining us on this deep dive. Make sure to check out the Stock Oracle link below, and we'll see you next time on Smart Wealth.